Hi everyone, I am K Sinha. Welcome to your US stock market weekly outlook. We do this every Saturday at 7:30 p.m. Eastern Time so that you should always know what you should know before the new week begins. Before we begin this week's analysis, an important disclaimer. Market returns are never guaranteed, but when we do the research properly, like fundamental analysis and technical analysis, we do get an edge in the market, but risk management cannot be ignored. And here is something new from this week. I am adding a short section called Market of the Week inside our technical analysis. Every week, we will quickly check the top performing global index along with S&P 500 and Nasdaq 100. This week's market of the week is Hang Seng Index. So let's begin. US market this week. This week US markets stayed positive. S&P 500 gained 1.09%. Nasdaq 100 was up by 1.15%. The Dow Jones added 1.10%. And small caps measured by Russell 2000 index led with 1.65%. So the broad market support was quite visible. Top three sectors this week. Sector-wise, leadership shifted a little. Healthcare stocks jumped by 7.25%. Utilities rose by 3.65% and information technology added 2.55%. That shows a mix of defensive strength plus selective growth. Major global markets this week. Outside the US, global markets also performed very strongly. FTSE 100 was up by 2.22%. DAX in Germany was up by 2.69%. Nikkei 225 of Japan was up by 0.91%. Hang Seng in Hong Kong was the leader with a rise of 3.88% rally this week. And India's Nifty 50 gained 0.97%. So the momentum was not just US based, it was global. Sentiments and volatility. Now let us check the sentiment dashboard. Fear and greed index stands at 54, which is a neutral zone. Put call ratio stands at 0.59, which signals extreme greed in options trading. Market momentum is neutral. S&P 500 is trading above its 125-day moving average. And the VIX, the volatility index, jumped 8.8% this week to 16.65, but it still remains in the neutral zone compared to its usual bands. So overall, optimism is there, but not excessive. US economy, latest news. Now the economy. This week was unusual because of the US government shutdown. When Congress fails to pass a budget, many departments shut down. That means official reports like monthly job reports were not released. So economists turned to alternative data. Reports from Chicago Fed and private firms showed that hiring slowed to weakest since 2009, while layoffs also slowed, an uneven picture. Services data also came in weaker than expected. But surprisingly, treasury yields still moved higher. Here is something important to understand. The yield curve. It simply compares interest rate for short-term and long-term US government bonds. The 2-year yield reflects short-term outlook, mainly Fed policy. The 10-year yield reflects longer-term growth and inflation expectations. Whenever you find 10-year yield versus 2-year yield, the spread is negative. It's called an inversion, which often signals recession risk. Currently, the spread is plus 0.55%. That looks like normalization, but it can also mean the market expects slower growth while inflation and debt concerns keep longer yields higher. So the message is labor market cooling, services slowing, but bonds showing stress. If you want to learn technical analysis, in simple English, check out my Zero to Hero English playlist on my main channel, K Sinha. The link is given in the description below.
Let's start with this stock market 101 video.
Good idea. It covers the basics.
Yeah.
Nice.
And then maybe the common mistakes one.
Yes.
Yeah.
So we avoid those.
All right. Now let us move to the charts. We will look at S&P 500, Nasdaq 100, and our market of the week, Hang Seng Index. This is the weekly price chart of S&P 500 index. What we can see over here, there was a breakout of this rounding pattern. So this becomes a very significant level, and this is the neckline of this rounding bottom pattern. Look at this rising trend line. Price has taken support here, taken support here. So multiple touch points can be seen on this trend line. So this trend line is acting as a dynamic support. If you measure and use the Fibonacci expansion tool, measure the depth and project on upside, 61.8% expansion level comes at around 7,000. So there is a greater possibility of S&P 500 going towards 7,000 level based on the breakout of this chart pattern. Now this is the daily price chart of S&P 500. What we can see, we had drawn this trend line and price is taking support over here. Multiple support can be seen over here. So this trend line, which is quite in proximity of EMA 21, is likely to act as a dynamic support. So where is the demand area if the correction takes place? The demand area is 6,600 to 6,643. This is the zone where the demand area exists because there are a confluence of EMA 21 and this rising trend line, which is already acting as a dynamic support. We can already see some loss of upside momentum. Back to back 2 days, there is a loss of upside momentum. And during the last trading session of the last week, there is a formation of a shooting star. Now, this is the weekly price chart of Nasdaq 100. Nasdaq 100 also formed this rounding pattern kind of thing. There was a breakout over here. And this is also trading and taking support on this trend line, which is acting as a dynamic support. Here too, we can measure the depth of this rounding pattern and project on upside using the Fibonacci expansion tool, and 61.8% expansion level comes at around 26,500, which could be the potential upside move in Nasdaq 100. Nothing is guaranteed in the stock market, but based on the breakout of this pattern, that level becomes very significant, where we might see a loss of upside momentum and a correction in Nasdaq 100. If you look at the daily price chart of Nasdaq 100, the price has taken support here, support here, support here, support here, and this was the aberration. However, the price gapped down, broken down this trend line, but did not sustain. And there was a buying on this gap down candle, and ultimately price broke out of this rising trend line. Again, this trend line is acting as a support. So this trend line is also quite in proximity of EMA 21 and volume weighted moving average. So 24,300 to 24,400 is a good demand area. However, in this index also, we can see some kind of loss of momentum, upside momentum. The only dangerous part of this formation is there is a formation of a hanging man, which itself shows the lack of upside momentum or exhaustion on upside move. Now let us talk about the index of the week. This is the monthly price chart of Hang Seng Index. What we can see, this was a major downtrending move. After that, it formed the double bottom kind of pattern, and this was the apex area where it took a lot of resistance and finally gave a breakout. After the breakout, you can see here, this neckline became the support. If you project the target and measure using the Fibonacci expansion tool, 61.8% expansion level comes over here. What does it mean? It is almost reaching to that level. And if you see this trend line, price has taken resistance here, rejection over here, resistance, resistance. So these two trend lines, which are a falling trend line, and this represents the dynamic resistance area or supply area. So we might see some kind of correction in Hang Seng Index. Maybe it may consolidate in the supply area, but if it comes down and forms this kind of pattern and then gives a breakout, it could be potentially very strong breakout, because this is a left shoulder, this is a multi-head formation, and then if it forms the right shoulder and give a breakout, we might see a very strong upside move. But this event has not taken place. We have to wait and see how it behaves in future. Conclusion. So to wrap up, US markets were higher across the board, with Russell 2000 leading. Global markets were strong too, especially Hang Seng and DAX. Sectors showed leadership from healthcare, utilities, and technology. Sentiment is neutral, but options activity shows greed and volatility ticked up. Economy is giving mixed signal, slowdown in hiring and services, while yields rise and shutdown creates uncertainty. Trend is still up, but always manage risk carefully. Learning never stops with K Sinha.